And welcome back to America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Scott Kirshner. 419-794-3030 is the number. Americasretirementheadquarters.com is the website. With the bond market having its worst year on record, it's no wonder why many investors are looking elsewhere to replace them. Wincantel.com Cheryl Moore says one option is to consider an annuity.
The annuity has a value proposition that works in any market environment, though. It doesn't matter if bonds are doing well or not. And that's that they provide a paycheck for the rest of the purchaser's life, even if they live to be 150 years old. This is a product where your monies are protected. The markets going up and down really doesn't have much to do with your annuity unless you're purchasing a variable annuity where those values can fluctuate.
So, guys, what are your thoughts here? Do you consider annuities to be an ideal bond replacement?
Well, I think that's a good question. I teach a class, and oftentimes we have classes at our local university. In fact, we're teaching a class coming up. It's the Baby Boomers Basics. You can get all the details on that upcoming event if you go to the website, Americasretirementheadquarters.com. Click on the Events tab. And I remember teaching this class where I was going over, again, the basics, and somebody had come up to the class, and he said to me, "Why should I not invest in bonds?" And, looking at the answer and, what the quote was here by Cheryl, she talks about considering an annuity an ideal replacement. The first thing that I would say is there's no Swiss Army knife approach when it comes to investing. I think, bonds, annuities, stocks, there's a lot of financial vehicles that can be right for somebody's financial toolkit. And if we think about it, the average investor has historically owned stocks and bonds and had a mixture of that. But the problem is with bonds, they've had a really tough time, especially here recently because of historically low interest rates, and now rising interest rates have been putting a lot of pressure in bonds. I also have sometimes people come in and say, well, I don't like annuities. I've heard annuities are expensive, or they have a misconception about what annuities are. So number one, you got to become educated about what your choices are. You got to look at the fact that, again, there's different financial tools that are designed to accomplish different things. Within the annuity space, two of the categories that we here at America's Retirement Headquarters traditionally use are what are called fixed and or indexed annuities. So these are accounts that historically don't have those high fees like variable annuities. These are products that offer a fixed rate of return for a certain period of time, hence the term fixed annuity, or an indexed annuity, which is an account that allows you to participate when the market goes up, but protects you against loss if an underlying index goes down. So those, I'd say, yes, can be great alternatives. The other thing that I would say is there are other options, things like real estate investment trust, dividend-paying stocks, high-yield savings account. And, last year probably somebody would laugh at me when I said the word high-yield savings account because that really didn't exist.
It hasn't for a while.
Yeah, but now, as the government has raised interest rates numerous times, the money market rates that are out there have become much more attractive today and don't have that interest rate risk that bonds do have. Now, speaking of bonds, again, not all bonds are bad. So if you've been listening to the show for a while, what you know is that government I-bonds, these are bonds issued directly from the United States Treasury Department. They pay decade-level high interest rates with no market risk. We have a complete show where we talk about the advantages of I-bonds. If you just click on the link below, we'll take you to that video that talks about why we love I-bonds. But in your situation, if you're an investor and you're not sure, are you allocated in the most efficient manner? What I'd say is we can take your information, we can put it in our software, run an independent portfolio analysis. We'll talk to you about the different threats and opportunities that are facing each one of your financial accounts. So then you can make a better educated decision about what financial product you want to use to solve the desired outcome that you're looking for. And I guess in final thought, Scott, I would say it's like, could I pound a screw into a wall?
You could.
I could, but it's not really the most efficient way to do it. No.
Right.
And I could also probably use a screwdriver to, try to pound a nail into a wall.
Right.
They both will do that, but they're not the most efficient way to do it. So when you're looking at your portfolio and you're trying to figure out what's the most efficient way to accomplish the end goal, that's somewhere like what we'll come in and talk to you about and help you out by creating that independent portfolio analysis to answer that question for you, to determine if you should have bonds or why maybe you should not invest in bonds.
these investment vehicles can be looked at, like Nolan said there, as a tool. It doesn't need to be the only tool in your toolbox. It may not necessarily need to be in your toolbox at all, and you definitely don't want it to be that Swiss Army knife, which will kind of take care of everything okay, but really not as well as having more specific strategies put in place. So to figure out how that works, how to put together your specific toolbox, schedule a time to speak with them, Americasretirementheadquarters.com, or give a call, 419-794-3030. Don't forget, at Americasretirementheadquarters.com, if you click on the events tab there, you can find out more information about the upcoming classes in November, the Baby Boomer Basics class coming up at Bowling Green State University. That's at Americasretirementheadquarters.com.